Today was an absolute historic day in the stock market. What felt like the biggest crash since March of 2020 in the major indices, it was. So we're going to talk about that. But the major indices actually finished up on the day. Absolutely crazy. So it was an absolute historic day. So we're going to talk about that in this video. But we're also going to talk about a few companies that I think are some great American companies that regardless of what the market's doing, these companies will do well in the long term. So stick around. Hey guys, welcome back to TipRanks. I'm Richard Allen. Thank you so much for joining me for another video. What a crazy day in the stock market. If you were paying attention to your portfolio or the stock market at all today, which you probably are if you're watching this channel, it was an absolutely crazy day. So we're going to talk about what's going on to the start of this year. The start of this year has been absolutely bonkers. In fact, the Nasdaq is on pace to have the worst month since March of 2020. Okay, so that's happening. The S&P 500 at one point today was having its worst day since March of 2020. And if you've been paying attention to this market for the past couple years, you know that March of 2020 was the beginning of the COVID crash. We had stocks were down 50, 60, 70% in like a month. It was absolutely crazy what was happening back in March of 2020. And it looked like today was the start of that. At one point, the Nasdaq in a single day was down almost 5%, 4.9% at one point. Absolutely crazy. So the Nasdaq 100 is a very tech-heavy sector. The tech stocks were absolutely crushed today. In one of my portfolios, personally, I have a couple different portfolios. One of my riskier ones, the swings in that portfolio gave me a little bit of an anxiety. At one point, I was down 15% in that portfolio, and then I finished up 0.6% in that portfolio. So it was a crazy, crazy day today in the stock market. But let's jump over to TipRanks.com, take a peek at the major indices, and see where they finished on the day. The S&P 500 finishing up 0.28% on the day. The Dow Jones finishing up 0.29%. And the Nasdaq finishing up 0.49%. But let's dig in to the actual day here. Let's look at this. Okay, let's just look at the all-time chart because it looks pretty drastic. But look at that drop, crazy, crazy drop, and then it recovered. Let's go over to the Dow Jones Industrial Average. Huge, huge drop there, and then it recovered. The Nasdaq, look at this, guys. Huge, huge drop in the Nasdaq. Again, the Nasdaq is on pace to have their worst month since March of 2020. So what I want to talk about in this video are a few great American companies that will probably do really well regardless of where the market is in the short term. We're talking about long-term investments, long-term companies that I think will do really, really well. At least two of them I think are at really good buying prices as well. Right now they've both dipped quite a bit. And then we'll talk about two others, one of them being IBM with just announcing earnings today and up quite a bit after hours. So we'll talk about them as well. But what's going on in January this year that is causing the stock market to be so tumultuous and volatile? Over the past month, the Federal Reserve has made it increasingly clear that it is serious about fighting inflation. The central bank has signaled that it will be stopping its asset purchases, it will be hiking rates, and possibly reducing its balance sheet starting in March. The December 15 minutes from the Federal Reserve that were just released on January 5th were extremely hawkish. They're looking at hiking rates a few times this year. They're saying that they need to get inflation under wraps to get consumer prices down. And honestly, that was a big shock to investors. And January has been very tumultuous ever since then. Now, under increasing interest rates, tech stocks tend to do worse under those circumstances. So that's why the Nasdaq has been hit so hard in anticipation that rate hikes will be drastic. Now, There's some talk of seeing 25 basis points, which would be 0.25% rate hike right now happening in March. But there's a chance, there's talks of that being a 0.5% rate hike right away in March to curb inflation really, really fast. So people are looking to Wednesday, which is the next Fed meeting this week, as a kind of a guideline as to what to expect to happen in March. So that's why we've had such a crazy start to the week. Now, who's buying? Who bought the dip today in the major indices? It was probably institutional investors. It was most likely retail investors freaking out and panic selling. Honestly, that's my thought, but I could be wrong. Now, let's look at a few different companies. We're going to talk about 4 different companies right now that I think are fantastic American companies that all have profit, that are all companies that are doing really, really well, that I think will continue to do well in the future. First, Google obviously is a fantastic company. We're going to talk about ticker symbol GOOGL, $2,600 per share, up 0.35% today. Google is a strong buy with 28 ratings, with an average upside over the next 12 months of 29.44%. Now, the S&P finished up 27%. That is not normal. The last couple years is not normal for the S&P. Usually we'll see a 7 to 9% increase in the S&P 500 in any given year. 29% in a 12-month period would be absolutely fantastic for any portfolio. So I love Google going forward. Second company on the list I want to talk about is, of course, Amazon, up 1.33% today, but trading below $2,900 per share. Last time we talked about Amazon, it was about $3,400 per share. Amazon did not have a great 2021. They were actually up about 4% over the course of 1 year when the S&P was up 27. So the Amazon severely underperformed the S&P. I believe that Amazon is going to have a good year this year, but it's been a tough start for tech stocks. So Amazon is pretty beat down. This is a strong buy with 30 ratings with an average upside of 43.58% over the next 12 months. So fantastic potential there for Amazon. Third company I want to talk about is Tesla, down 1.47% today, but at one point was trading $100 below this price. It was like $8.30 or something. It was a crazy, crazy day, crazy swings for Tesla. But if you look at Tesla, for the first time since I've reported on Tesla, the analysts all agree that there is 12-month upside for Tesla. So you can see that right here, 15.5% upside on Tesla, giving us a moderate buy based on 15 buys, 8 holds, and 6 sells. But still quite the disparity there for Tesla, $1,580 on the high end and $295 on the low end. Crazy, crazy disparity for Tesla. They are reporting earnings this week as well, so we'll make sure and report on that when that happens. And I'm expecting another really good quarter for Tesla, as long as they get supply constraint issues under wraps that has been really plaguing the auto industry over the past couple years. And I expect Tesla will get that under wraps. All right, fourth and final company I want to talk about is IBM. This is a company that's been around for a long, long time, and I think will be around for a long time. They reported some pretty darn good numbers and gave some good guidance going forward, and are up. At one point, they were up well over 6% after hours, up about 5% right now after hours. But this is a moderate buy based on 8 analyst ratings with an average upside of right around 17% for IBM going forward. There are a lot of opportunities in the market right now. I believe in the U.S. stock market going forward long term, but there's a lot of stuff going on in the market with the Fed hiking rates soon, the geopolitical issues, health issues with COVID. There's a lot of stuff going on in the world right now that is causing the market to be volatile and very, very shaky. So it's keep that in mind. There could still be a lot more downside in this market. We could have a repeat of 2020. At one point today, the Nasdaq was on pace to have its worst month since 2008, and that was during the big financial crisis. So it could shape up to be a pretty devastating month for the stock market. So keep that in mind. I expect a lot more volatility. The swings today for the stock market were crazy. I mean, it was a crazy, crazy swing. For the S&P to be down 4% and then finish up. For the Nasdaq to be down 5% and then finish up. That's a big swing, guys. It's a 10% swing in a major indice. That's a lot of volume in and out of the market. Very, very volatile market that we have right now. So keep that in mind. But keep coming back to this channel because we're going to keep making videos like this for you guys to hopefully keep you level-headed during these times, okay? So thank you so much for joining me for another video. I appreciate each and every single one of you. As always, if you learned something new or found any value in this video at all, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.